Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I am delighted today to be able to speak to Jamie Constable of N+1 Singer, one of the sharpest minds in the city when it comes to anything economic and capital markets. So welcome, Jamie.
Thanks, Paul. Good to see you again.
Yeah, well, there's a lot been happening over the past 4 weeks since we spoke, and not least to the delight of a lot of people, the opening up of pubs and restaurants and cinemas inside and stuff. But what sort of caught your eye in terms of the economic and capital markets?
Well, I think, we spoke last time about expecting to see upgrades for growth in the UK. And it's a little bit old news now, but I think it's still worth mentioning. The Bank of England really shot the lights out with their upgrades. I don't think anyone expected them to go from 5% to 7.25% for the UK economy. And you mentioned consumer opening up. They're only assuming that the consumer spends 10% of those excess savings that they've formed. Now, when we spoke last time, we were talking about 150 billion of excess savings. They've rounded that up now to a cool 200 billion of excess savings. I mean, only spending 10%. I mean, some of the newspapers today, I think, are saying that people are going to save, but they're still saving 90% on those Bank of England forecasts. So it's looking pretty boom town in the for the UK economy at the moment.
Yeah, well, I mean, I think it's certainly when it comes to sort of like, just as a poll of me and the locals around here, I mean, if you're not going to spend them on sort of experiences going down the pub and having nice meals indoors, not in the rain, which is a bit of a change because it's freezing here in Birmingham. But if you're not going to be doing that, you're going to be carrying on with your house. You're going to be buying new houses. You're going to be repair and maintenance. And I think we've already started seeing that in the earnings season, haven't we, with the sort of house builders. We've seen inflation, the brick builders. I mean, I don't know what your thoughts are there.
Well, I think upgrades is the same, because you look at those GDP numbers and what we're seeing there, and that's going to have what's happening in the real economy. Looking at what companies are saying, and if we just look over recent days, I mean, Dunelm, you might say they were a big beneficiary from the lockdown and have done well out of it, but they've come out with earnings, a statement today substantially materially ahead of expectations again. So it's carrying on from the lockdown into the opening up. Look elsewhere, just in the general economy, Knights, Gately, the lawyers, they're extremely busy as they've ever been. Knights upgrades today. You just can reel off the upgrades. Going across the pond, I suppose, to the US, Ferguson upgrades. It's across the whole gamut now, really, of just companies. Future PLC companies are upgrading. I suppose that does raise the question, though, because what we have seen a little in the market at the moment is a bit of travel and arrive, an old adage for the market there, that is it already in share prices that we're going to see these upgrades? So some shares are moving ahead just because the scale of the upgrades is so high. Others are kind of pausing for breath a little bit. And I think that's what we're seeing at the market. The market needs to breathe a little bit to work out how big the upgrades are going to be. But certainly for the UK exposed stocks, I don't see this as the only upgrade we're going to get. This is the start of the upgrade cycle, and there's more to come.
And what do you think about sterling? Because it's gone through a bit of a sort of a boom, really, over the last 6 months. It's gone from, I think, against cable, it was about 120, sort of like, middle of last year. And now that we've had a successful vaccination rollout, the economy is absolutely ripping, then it's now over 140, which is incredible, really, because how do you see that moving going forward? Because that will affect anybody with overseas earnings.
Yeah, well, it's again, I think we discussed it a little bit last time. Sterling, it's paused for breath a bit, I think, again, there on sterling. It's gone up. I think you've now got a bit of a differential going on, because if we talk about inflation, we've had the UK CPI numbers out this week, 1.5%, which was in line with expectations, doubled on the last reading. It's going to keep on going up. The base effect is going to move that. So moving up, the Bank of England is saying averaging 2.5% this year, which is top end of all the expectations, which is quite interesting. They're right up there. But if you look over the pond, I mean, the US, the last inflation reading there was 4.2% and then 3% ex energy. So I think that's starting to, it's a little bit harder for sterling to move ahead now against the dollar. The US dollar index is at a 6-year low, would you believe? So the dollar is really weak against all of this. So it's made the easy gains, I would say, now to 140. if you think back 5 years, the range was typically 140, 160, wasn't it? Pre-Brexit and feed the vote on Brexit. So we're now at the bottom of that range. If we assume that Brexit's all past us now and we're moving back to some kind of the old ranges, as it were, then maybe we're at the bottom of the range and maybe we can move back up towards that 160 level in time. But I think you need something more to change now to move that.
Yeah. And I guess probably for investors, if you want to sort of see where that one moves, it's looking at the real differential between the sort of the yields between both countries. If you've got effectively, even though the treasury is higher, is about 10-year treasury is about 1.7, I think, in the States, whereas in the UK it's about 0.8. So you'd think just on a nominal basis that it was better to put your money in the States. But if you've got inflation of 4% in real terms, actually the best place is in the UK. Now, what seems to be happening also is there's a bit of a mini M&A boom recently. I mean, you had this morning even, you had KKR bidding for John Lang, and you've had a whole bunch of different stuff. You've had Blackstone for some Modwin, and Proactis has also been. So what are your view on the sort of the M&A boom here?
Well, I think what it's telling us is that UK assets are cheap. Even though the currency's moved up. I mean, we had a lot of it's not just a mini boom now, I think, Paul. We had it last year as well. The whole load of companies, the ones you've mentioned, UDG, that's been taken out as well. Immunodiagnostics, that's been taken out as well. There was a bid for SAN as well. I mean, it's been rejected at the current stage, but it doesn't mean they won't come back. UK assets are cheap, particularly to private equity funds who've got access to very cheap money. So it's going to continue. I think people are realizing that UK assets are cheaper now. If you look at the big bank, the Bank of America survey that they've done, UK asset allocators have put more money into the UK now. So it's becoming more attractive. The short that we had on from Brexit is gradually closing. I mean, the M&A is going to keep on going. I mean, UK assets look cheap. So in that case, people are going to keep buying them.
And what about this Indian variant, which seems to be sort of reared? Is that a potential risk, or is actually for the UK domestic economy, it's going to encourage staycations? Is that actually an opportunity? How should investors sort of factor that one in?
Well, I think it's very much, it's right at the forefront of people's thoughts at the moment, because if you look into Asia at the moment, it's not just India now. Thailand's got rising cases as well.
Nepal.
And Singapore is semi-locked down again. So, and Taiwan's got a soft lockdown as well. So it's the case to it might roll out now. What it basically means is that vaccination is key, as we all know. And UK is right up there at the forefront in terms of rates of vaccination. So I think that is becoming really key to the global recovery. But as you say, because we're right at the forefront of it, it means that the UK economy itself, so long as we don't get a big explosion of cases and that the vaccines work against the variants, which is the key point, the UK economy looks a safe haven. I mean, look at Australia, look at New Zealand. They've got their borders closed effectively at the moment, and their economies are doing fine. And they have been doing for quite a while. The question is, will we be able to go on holiday? Well, we can at the moment. As long as it remains under control, we should be still able to, only to Portugal, of course, but there is that protection given by the rapid rate that we've rolled out the vaccines and the rate that we continue to do so. But it is a question for the global economy that obviously Asia has been the engine of growth for the global economy. If Asia does start to see a big reemergence of COVID, that will raise questions in terms of equity valuations and markets.
Yeah, I guess though for the domestic economy though, if you've got more Brits actually holidaying at home this year, it's got to be good for the UK sort of pub industry and leisure industry. That's for sure. So
certainly, it certainly will be. I think we used the number last time: 62 billion spent on holidays in 2019. If that's not going to be spent abroad, it's going to be spent in the UK economy.
Yeah, and I'm guessing sort of like even if there is a slight wobble, then central banks are going to come to the rescue again, aren't they? That's sort of what we've seen in this movie before. They're all in, and therefore there's no way they're going to sort of damage what they've already had to spend and to to potentially jeopardise the whole economic recovery.
Totally agree with that. Yes, they will. I mean, we're in quite a weird position at the moment because on the one hand, you've got people worrying about growth and inflation, but on the other hand, we're worrying about the variants and the and potential re-emergence of COVID. So the market's kind of caught in a bit of a pincer movement at the moment. And I think that's why the market is just going sideways a little bit at the moment, while it tries to work out what's going to happen next.
Yeah. And where's the, given all that sort of in that context and the timescales, where's the best sort of like assets to put your money at the moment?
Well, it's still equities, isn't it? I think, unless you're going to get a wholesale increase in the variant, and whilst the variant still works against, the vaccines still work against the variant. Sorry, got that the wrong way around. But while that's still working, you're not going to get a wholesale increase. You look at the US, you look at UK, increasingly across Europe and other countries, vaccines are being rolled out. Yeah. So while that happens, it's still the growth and the comeback and the bounce back that's really going to worry markets more than anything else. And that's the bond yield argument, and that's equities versus bonds, and bond yields moving up still towards 2%, as we talked about it before, on the US, and 1% in the UK.
Yeah, well, certainly in my portfolio, I've got no long duration bonds and very little cash, so I'm fully loaded certainly on equities. But where in particular stocks, Jamie? What would we see your preferred play if we're going to have sort of like relatively hard, soft international borders? You've got Boris saying yesterday that anybody on any country on the amber list, people shouldn't be going on holiday. Might be essential travel, but certainly not on holiday. Then where's the best place to put your money in equities?
Well, I'm still basically talking the barbell portfolio approach, with domestics at the front on one end, and then your secular growth areas of the economy and stocks exposed to that on the other end of it. I still think that's the place to be. Some of those domestics, as we just said, have paused a bit on their first upgrades because, let's be honest, markets are at good levels, but as I said earlier, this is the first of what I see as a number of upgrades coming through. So those share prices will move ahead again. So I'm not changing the view really on where we should have our money at the moment.
And what about pricing power? Is that important on equities? Because if you've got inflation sort of like, moving up, particularly on the domestics, then do you need stocks with pricing power?
Totally, 100%. The first question you're looking at asking at the moment is, does the company I'm looking to invest in have pricing power? With inflation like we're seeing, if they can't pass it on, they're going to get squeezed. You've had one or two instances already of companies that have warned about not being able to pass on pricing. I mean, you mentioned the BRICS companies. Even Forterra said that this week that they passed on pricing to date, but they can still see quite huge price rises, input price rises coming through. And there are upgrades, don't get me wrong, but they sounded a note of caution that, can we keep pushing these price rises through? So pricing power, it's been a key for the market in a low inflation economy. Even in a low inflation economy, it's been key. But pricing power is everything at the moment.
And that brings us neatly on to a sort of like one particular sector, which is a secular grower and has got absolutely enormous amounts of pricing power, is sort of healthcare. Plus, obviously, it just had a sort of like transformational change over the last 18 months, and it saved the world in terms of the scientists bringing vaccines to markets, improving sort of like COVID testing, the accuracy of those. Hopefully at some point in time we'll also get a therapeutic. What's your sort of view on sort of healthcare investing, and whether it's a good area for people to start having a serious look at?
Well, healthcare it's a big specialism for N+1 Singer. It's a core competent in terms of us and stocks we cover, as you know, with some of our brokerships, things like and like that. I think it's an area that is the pandemic has changed the whole picture, and you're going to see prolonged spending by governments and investment in the sector. I mean, testing, is one of the big things that's going to need to grow. If you look at the continent, and I frequently visited to Poland, for example. If you go to Germany, they've got a whole network of private testing labs, clinics. You can go in on a Saturday, you can get tested for anything that you want and get the results back. And I think importantly, if you go and get tested, at least in London where I am, it costs you the fortune if you want to get, if you go and get tested privately. Over there, it's a reasonable price, so people can get tested. And what we all know about healthcare is early diagnosis, absolutely key. Diagnose early, you reduce the costs for the healthcare system across the whole world if you can do that. At the moment, we've got obviously a massive backlog in the UK. Just going back to the UK again,
4.7 million, and that's excluding all the people who haven't been able to be screened who should be on the list.
Yeah, so you've got this huge backlog. You're going to get investment across the healthcare world, whether it's scanning, whether it's testing. It's going to have to happen because everyone's woken up now to the potential challenges that we have for the world in terms of what in this case is a virus, but other diseases as well.
Yeah, I mean, I think you're absolutely spot on in terms of the actual testing, because at the moment the government has got 4 framework contracts out for tender, lots 1 to 4, and they haven't yet made a firm decision on who their absolute key suppliers are. But if you add that all up, that comes to 20. They've reserved 22 billion pounds of new testing spend over the next 2 years. So that's just coming down the pipe, and that just shows you. And also we've got a whole bunch of different new technologies: gene editing, genome sequencing. We've got sort of like precision healthcare. We've got telemedicine, which now is need to get the delivery of that of healthcare to the actual coal phase, and much cheaper and quicker as well. So there's been a revolution that will continue to be. Where particular stocks would you sort of like suggest people have a look at? Because you've obviously got, there's a whole host that people can sort of like see. I know you mentioned sort of genomic sequencing.
Well, that's key, isn't it? Because obviously you're going to have your PCR test or your flow test.
Yeah.
But at the end of the day, what we're worried about at the moment are the variants.
Yes.
The only way you can find the variants is through the sequencing angle on it. So there, obviously, you've got the government labs, but other companies that are exposed to that are companies like Your Gene, Source Bio.
Yeah.
And then, of course, you've got EKF. The picks and the shovels was an old adage that was used. If you think back to the tech boom of the 2000 period, picks and shovels were what people talked about.
EKF came up with a very positive trading update today, and I saw there was sort of like upgrades. I mean, it's amazing because the shares have done really well. But actually, when you look at the numbers, they're still trading on a pretty modest sort of EBITDA, sort of like multiple EV. I think it was about 13 or something. So there's still plenty of gas in that tank.
I think so, and they're provided one of the picks and shovels. But of course, EKF isn't just a COVID play. The upgrade today that came through from their core business returning to 2019 levels of activity. So you can see how quickly that testing is going to come back, because, as you just very correctly said, you've got that massive backlog of people who need to find out what might be ailing them.
And I think certainly when you mentioned on the genomic testing and stuff, to effectively DNA analyze down to the actual degree of which types of variants is going to be crucial to be able to then tweak your vaccines. And what's also interesting for investors is that I think we're getting a sort of like a Silicon Valley of sort of diagnostic technology built into the UK, because not many people have really picked this one up, but the UK is the only country in the world almost doing 100% genomic testing of every positive test. And they then put that into a database, a bio database. And that's going to give a huge competitive lift to any test or diagnostics company having access to that in the UK. And I think you've seen that with likes of, Avacta, Novocyte, Source Bio, Omega Diagnostics. All these guys are actually knocking the ball out in terms of accuracy of their lateral flow test. So I think what we're going to get is almost like a cluster, a bit like Silicon Valley in medical diagnostics. But I don't think it's just that as well, because I know you've got some like new technology like immunodiagnostics and stuff. So you've got sort of you've got OnCommune, and you've also got Verici as well coming to play over the next couple of years.
Yeah, I think you've got plenty of stocks here in this area. I mean, we talk about you wanted to be involved with secular growth in terms of that barbell I talked about earlier. And certainly healthcare would be one end of that, the other end from the domestic, so secular growth area for the UK economy, where UK has expertise, world-leading expertise that has had for many years. And as you say, we've got genomic testing there. We might not have the public testing clinics and things out in the economy yet, but I'm sure they will come through in the future, because people will demand them, and companies will innovate and bring them into the market. But yes, I agree. Healthcare is definitely one of those areas where we should be looking.
Yeah, and that database, the government database, could give the UK this head start, because if you overseas countries are effectively behind the curve in terms of keeping their vaccines up to date, no doubt about it. And I'm just hoping that we get a blockbuster therapeutic at some point in time. So anybody who has to, rocks up into hospital requiring actual sort of help and stuff, hospitalisation. Okay, brilliant, Jamie. Well, thanks very much for your time. And next time, I'm hoping to pick your brains on all things technology and software related, as well as any more sort of bits and pieces you have, because that's another place where you've got sort of good pricing power. So many thanks for your time, and look forward to touching base again in a month's time.
Thanks, Paul. Good to speak to you again.